You thought you were investing in an electricity company, but at some point it starts to feel like you are investing in rules. The unsettling part is that once you notice it, the same chart reads like a completely different story. After the close, the price was around $350. It was down about 1% on the day, and the pre-market was in a similar range. That kind of calm can feel worse than a spike. It can look like the market is refusing to deliver a verdict, with the real uncertainty still sealed inside the price. Over the last 52 weeks, the stock moved roughly between $160 and $450. It ran when the narrative overheated and sank when fear spread. The current level sits a bit above the midpoint. The story is still alive, but conviction is not finished. TLN is a US company listed on NASDAQ, operating as an independent power producer. In plain terms, it is not a regulated utility that sells power at a set retail tariff. It runs generation assets and sells into wholesale power markets where prices form in real time as supply and demand collide. Power is hard to store at meaningful scale, so electricity has to be produced and consumed almost simultaneously. That is why prices can swing sharply when the balance shifts even a little. And that is why a power company does not earn money in just one way. It typically has three main revenue streams. First is energy revenue from selling electricity. Second is capacity revenue, which is payment for being ready to supply when the grid needs you. Third is ancillary services revenue, which is payment for supporting grid stability through things like reserves and frequency regulation. TLN lives inside that structure and turns it into cash flow. So why did this company end up in the middle of an AI story? The answer is data centers. AI compute data centers consume huge amounts of electricity, and the demand tends to persist for a long time. Data center operators want power that is cheap, stable, and reliably delivered for years. Generators want large customers and long-term contracts that stabilize cash flow. That part makes sense. The real battleground starts with a tougher question. How is the power delivered? Once electricity touches the grid, congestion and reliability costs appear. Because the grid is public infrastructure, the question of who pays those costs becomes a fairness issue. That is why this industry does not end with a private contract. Rules and regulator decisions can dominate outcomes. Those rules are the center of the TLN mystery. The timeline matters. On 2024-11-01, the Federal Energy Regulatory Commission did not accept a proposed amendment tied to an interconnection service agreement involving TLN. This has been widely discussed alongside the Susquehanna nuclear plant in Pennsylvania and the nearby Amazon Web Services data center power